Retail investors own half of the XRP. So why isn't it $10 yet? Now, we need to let this sink in a little bit, because if retail investors really own nearly half of the entire XRP supply, then why isn't XRP sitting at $10 already? This is one of the biggest questions in crypto right now, because on paper, XRP should be in an incredibly strong position. Millions of holders around the world, one of the strongest communities in crypto, real world utility, major institutional conversations happening behind the scenes, and yet the price still feels like it's constantly fighting to break free. So what's really going on? Who actually controls the XRP price in 2026? Is it the retail investors like you and me? Is it Ripple with the escrow and the monthly unlocks? Or is it institutions quietly positioning in the background? Or is the truth much simpler and Bitcoin still controls absolutely everything? Because if retail owns half the supply and XRP still isn't exploding, then clearly something bigger is happening. And today, we're going to break it all down.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Quickly before we dive in, on Friday we dropped what has become one of the best performing videos on this channel recently over on the UK Crypto Podcast. That's the podcast that I host alongside Paula Talks Crypto, where we break down the Jake Claver's XRP domino theory. And that's the idea that XRP could eventually leapfrog Bitcoin and become the key piece in the biggest wealth transfer of our lifetime. It's caused a huge amount of debate, and honestly, it was one of my favorite breakdowns that we've done so far, because we went piece by piece through that theory and asked whether it actually holds weight. Which parts could be true, which parts I think are correct, and which parts are firmly in fantasy land. The feedback on that episode has been incredible, and it's become one of our strongest performing releases, which tells me just how many people are seriously thinking about the bigger XRP picture right now. So if you haven't watched it yet, I'll link it at the end of this video so that you can jump straight in and watch it after this video is finished. And if you want to check out the UK Crypto Podcast in general, then you can go and visit ukcryptopodcast.co.uk, or there'll be a link down there in the description below where you'll find all the latest episodes. Now let's get into today's topic, because this one matters. A recent article highlighted something that grabbed a lot of attention across the XRP community. The claim was simple. Retail investors now own nearly 50% of the total XRP supply. Now, if that is true, that is massive, because usually in crypto, one of the biggest fears is centralization. People worry that whales, insiders, or project founders hold too much of the supply and they can manipulate price whenever they want. But XRP has a slightly different story. Unlike many newer projects where a small group controls everything, XRP has been distributed across millions of wallets globally over many years. The article points to the fact that retail ownership has become incredibly strong, with everyday investors holding a huge portion of the circulating supply. That creates what many people call the strong hands floor. In simple terms, a lot of XRP holders are not traders. They are not flipping for a 5% increase. They're not panic selling every time they see a red candle. They are long-term believers. Some people have been holding XRP since 2017, some since before that. Some genuinely believe XRP is going to be part of the future global financial system and refuse to sell at the levels we're at right now. That kind of conviction matters in crypto, because when you have millions of people unwilling to sell, it creates natural support for that price. It reduces the available supply and it creates scarcity. And in theory, scarcity should push price higher, which leads to the obvious question. If retail own half the supply and people are not selling, why isn't XRP flying? Why aren't we already sitting at $5, $10, or even beyond that? Well, this is where the twist comes in, because while retail ownership sounds incredibly bullish, there is another major player in this story, and that is Ripple. And this is where the debate always gets heated, because Ripple still controls a huge amount of the XRP through escrow. Every month, XRP gets released from escrow. Some gets returned back to the escrow. Some gets used for operational purposes, partnerships, liquidity solutions, institutional programs, and strategic business growth. Now, depending on which side of the debate you sit on, this is either a very good thing or a major problem. Supporters argue that Ripple using XRP to expand the ecosystem is exactly what creates long-term value. They say if Ripple wasn't building partnerships, pushing adoption and growing utility, XRP wouldn't have the future people believe in. And that's a fair one if you ask me. But critics say something different. They argue that constant escrow releases create permanent sell pressure. No matter how strong retail conviction is, if fresh XRP keeps entering the market, it slows down the price appreciation. And this is why the argument becomes so divided, because both sides have a valid point. Even legal expert Bill Morgan has weighed in on this conversation, pointing out that simply saying retail owns half doesn't automatically mean retail controls the price, because ownership and price action are not the same thing. Price is driven by flows, by liquidity, and by who is actively buying and selling, not just by who is holding. And that distinction is absolutely massive. Someone holding XRP for 5 years helps supply, but somebody moving millions in and out actively impacts the price. And that brings us to what I personally think is still the biggest short-term driver of XRP, and that is Bitcoin. This is a part a lot of people don't like hearing, but it's true, and we can't escape the fact. Bitcoin still controls almost everything. When Bitcoin dumps, altcoins dump harder. When Bitcoin breaks key resistance, altcoins usually follow. When macro fear hits the market, people don't ask whether XRP has utility. They just hit the sell button because crypto still trades as a risk asset. It trades as a sector. And until that changes, Bitcoin remains the gravity for the entire market. It is the main indicator for the whole crypto market. You can have incredible XRP news. You can have major Ripple partnerships. You can have ETF rumors. You can have regulation progress. But if Bitcoin decides to drop 10%, XRP is probably going with it. I have made so many videos on this, and I've been told so many times that I'm wrong, but time and time and time again it happens, and I'm proven right. Not because I'm a genius, but because I look at what's in front of me. It's just the reality. Bitcoin is hugely dominant in crypto, including on XRP. And I think this is one of the biggest reasons that people get so frustrated. They expect XRP price to reflect the XRP news, but often it reflects Bitcoin news first. And that doesn't mean XRP fundamentals don't matter. It means that timing matters. And right now, Bitcoin still dominates timing. This is why I always say there are 3 different games happening at once. Short-term price action, mid-term institutional positioning, and long-term utility adoption. And most people confuse them. They get it all mangled in their head. They see some kind of long-term adoption that's talking about XRP, and they're expecting today's price to move. Now, short-term price action, that's mostly market sentiment. And guess what, guys? That's Bitcoin related. That's Fed meetings. That's interest rates. That's macro fear. That's ETF inflows. That's risk appetite. Midterm positioning is where institutions start to matter. This is where things get interesting, because if we were to see a genuine XRP ETF conversation move forward, everything changes. And I mean everything, because institutions do not buy like retail. Retail buys emotionally. Institutions buy strategically, quietly, systematically, and at scale. If pension funds, asset managers, and institutional desks start treating XRP as a legitimate exposure vehicle, supply dynamics change incredibly quickly. In fact, very, very quickly. Because suddenly you're not talking about people buying £500 worth of XRP. You're talking about funds buying tens of millions, hundreds of millions, and that changes liquidity, that changes price discovery, and that changes volatility, and that changes the entire game. And I think this is the wild card that most people underestimate. Because while everybody argues over escrow and retail ownership, institutions could be preparing to completely rewrite the conversation, especially if regulatory clarity improves, especially if the SEC situation continues in the Ripple's favour like it has been, and especially if utility becomes impossible to ignore. And that leads me to the third game, the long-term utility. This is where the real believers live. This is the part where people talk about cross-border payments, banking infrastructure, tokenizations, CBDCs, liquidity provisions, settlement layers, the list goes on. This is the bigger vision for XRP. This is where the moon boys and the real analysts often collide. because some people shout 589 without understanding the mechanics, and others dismiss everything because the price hasn't moved yet. The truth is probably somewhere in the middle, and that's probably how I see myself, somewhere in the middle, because utility matters, but utility takes time, and massive systems do not move overnight. Banks do not flip a switch tomorrow and rebuild the global financial systems by Friday. It takes years, it could take decades. But once that infrastructure begins moving, the impact can be and probably will be enormous. And that's why convictions matter. That's why patience matter. And honestly, that's why so many people still hold XRP despite years of frustration, because they're not buying today's chart. They're buying tomorrow's system. Now, let me give you my honest opinion on all of this. Who controls the XRP price? The short term, it's definitely Bitcoin, without question. Bitcoin is still the king. Like it or not, that's the reality. Now, midterm, this is the institutions. This is where the major shift could happen, and we've started to see the green shoots around this already. ETF conversations, institutional adoption, liquidity partnerships, and real capital starting to enter. That's where price acceleration becomes serious. And then long term, we've got utility and regulation clarity. That, for me, that's the end game. That's where XRP either proves the thesis or it doesn't. Not Twitter narratives, not YouTube hype. Real utility, real adoption, real infrastructure. And that is what really matters. And I think this is where people need balance, because blind hopium is dangerous, but blind pessimism is equally stupid. You need to understand both sides of the coin. Yes, retail ownership is bullish. Yes, Ripple escrow matters. Yes, Bitcoin dominates. Yes, institutions could change everything. All of these things are true at once. And the smartest investors are the ones who can hold multiple truths at the same time instead of turning everything into tribal warfare. Because crypto Twitter loves extremes. Either XRP is going to zero, or it's replacing the entire financial system next Tuesday. And reality is usually less dramatic, but often more profitable. And that's the key. Positioning yourself before the market agrees, not after it. That's where real money gets made. Not chasing green candles, not buying headlines late, but by positioning early, staying patient, managing risk, and understanding what game you're actually playing. Are you trading short-term volatility? Or are you investing for institutional adoption? Or are you holding for the long-term utility thesis? Because these are three completely different strategies. And most people lose because they mix them all together in their head. They're trying to trade XRP on a short term, thinking it's going to go up because of adoption. It doesn't make sense. They're not connected. They say they're going to be a long-term investor. Then they panic sell during a pullback. They panic sell at a load of red candles. Then they say that they're traders. Then they hold their losing trades for 6 months because they're the other end of this scale. Clarity matters. Discipline matters. And if you can get those right, you'll put yourself miles ahead of most people in this market. So now I want your opinion. What do you think really controls the XRP price right now? Is it retail? Is it Ripple? Is it Bitcoin? Is it institutions? Or is it something else completely different? Drop it in the comments, because I genuinely want to see where other people stand on this. And if you haven't watched our Friday breakdown of the Claver's XRP Domino theory over in the UK Crypto Podcast, make sure that you do. That episode has sparked some of the best conversations we've had recently. And if you're serious about understanding the bigger XRP picture, you need to watch that one next. I'll link it right above my head somewhere next so you can watch it. And if you want daily crypto discussion, deeper market breakdowns, and the strongest crypto community in the UK, come and join us inside the Crypto Wolfpack. That's where real conversations happen. You can check that out by heading over to cryptowolfpack.co.uk or checking out the link in the description. As always, stay safe, stay smart, and I'll see you on the next one. And remember this, the strength of the wolf is in the pack.